Hello, and welcome to another episode of Test, Optimize, and Scale. Privileged to have Dara Albright here with us today, host of the D-Wealth News podcast, as well as D-Wealth Education, crowdfunding advocate, crowdfunding advisor. Excited to see where the discussions go today. Dara, thanks for joining us.
Jason, thank you so much for having me. Really excited to do this.
Me as well. I know we've had some very good chats at conferences, but wanted to familiarize the audience with you, your story. Thought we could start there if you wanted to kick things off.
Right. Sure. So how far back should we go? Should we go back to elementary school or? No, I'm
We've
joking.
heard those stories on the podcast
Right.
before, wherever your journey begins.
Right. So I guess the work journey began in New York on pretty much in finance. I mean, I come from a very traditional, conventional background in finance. I mean, I've done everything from retail sales, institutional sales, worked on trading desk, bonds, equities, IPO execution. I mean, you name it, I probably did it. And which was great because I think it's great to sort of have just an opportunity to really wear a lot of hats and learn a lot about how the business works. And instead of just focusing on one specific niche of finance, you get to see sort of that broad picture. So it was a lot of fun. And back in the early 90s, I started working with this firm called Unterberg Tobin. It was actually Unterberg Harris at the time. And many of them were like the kingpins of the technology venture world. And in the IPO world, they were kind of like the icons of the new issue market, bringing a lot of technology companies public. Some of the biggest names that really changed the world throughout the day, like they were the guys that took Intel public in 1971. And working with them in the 90s was such an incredible opportunity because it was really, I started in the early 90s. So it was really before people had emails and the world was starting to change because of the internet. It was at a time when the internet was starting to just emerge and really change everything that we knew, not only about communications and about how we shop and how we communicate, but how we bank, how we raise capital, all about finance. So it was really an incredible time. And for me personally, I had the opportunity to sort of be in, to see kind of the tail end of that world where the people's capital really had the opportunity to finance the innovation of the day. And that was really an exciting time. And then, what we've seen after the dot-com bubble burst and then kind of moving into the 2000s, the world really did change. And this is where the whole kind of crowdfunding gets into it. But the world really changed in that especially in finance, it became way more institutionalized and institutional driven and monopolized. And really what had happened was that whereas it used to be that small companies could go public as a small cap and capture money from the overall population, like just as an example, Intel went public in 1971 at a $58 million valuation. I mean, put your mind around that for a second. $58 million. I mean, that's like barely even, a series A round now. I mean, it's barely even a seed round now.
Sure.
But they went public at a $58 million valuation, and all those investors that were able to participate in that IPO, it had the chance to experience, massive appreciation, hundreds of thousands of percent, over the years in their retirement portfolios for the most part for individuals. And, unfortunately, what started to happen was that companies were going public later and later in their life cycle when they were much, much, much bigger. and the opportunity for individual investors to participate in that type of growth, they didn't have that anymore. Instead, that all went to VCs and the larger, you know whoever is deemed worthy of being able to invest, in a small cap, or micro cap anyway. Unfortunately, that's kind of how it went. So I want to say right after, I guess a little bit shortly after the financial meltdown in 2008, and this was now at a time when now the next iteration of mass media was now emerging, social media. And at this time, I started reconnecting with a lot of old friends and colleagues on Facebook, and a colleague of mine that I used to work with at Unterberg, actually, she had connected on Facebook and said, "What do you make of these new venture platforms that are emerging to facilitate secondary transactions in these private companies like Facebook and Twitter, and like these hot social media companies at the time that were still private?" And I said, this is really, really interesting. So I started like looking into that, just kind of doing some research. It really inspired a lot of thought, and started thinking about, what makes markets scale, stock markets, what makes economies grow, what makes, stock markets, rise and increase and expand and appreciate, and I started thinking about this, and, I came to this hypothesis really that it's been invention in mass communications and mass media that's been the impetus for stock market growth and economic prosperity over the last 100 years. So radio inspired the first, roaring 20s, great bull market in 1920s, television 47 to 57, internet in the 90s. And what really, it occurred to me that each new invention in mass communications was creating a more meaningful and dynamic way for brands to engage consumers. So when consumers were engaged, they were basically, they were buying, they were spending, they were buying new products. And when they were buying, sales were growing, sales were going up, revenues increasing, jobs being created, it's the whole effect. And I started looking at this saying, this is really interesting, because I started seeing a lot of similarities between what was happening in this new kind of online, finance world, where companies were now, whether it's looking to raise capital online, or whether it's looking to transact and sell shares in these, private companies to one another, and looking, and I started to watch that, and I started to say to myself, this is very, very interesting. This is kind of looks like and feels like, from what I've read, because I wasn't there, I was way too young, but the emergence of NASDAQ. And I started doing some comparisons and started thinking about it. And then I started really looking at social media and what was happening. And I realized, for me personally, I was no longer getting my ideas to buy products from a radio jingle or a television ad, or, a banner ad on the internet, but I was taking very seriously ideas that people were posting, that I know, friends that I knew for, years and years and years, decades even, ideas that they were posting on Facebook and sharing pictures of, and ideas. And I said, that really is a game changer. And I think this is really powerful. And it really does have, I think, the power to, to really inspire a next great period of economic prosperity and stock market growth. So I started looking at that, but then I realized, and this is now coming back, again, this was right after, not too long after the 2008 meltdown. And I said, but unlike the days when Intel went public, companies weren't going public as a small cap. They weren't tapping into that capital. And, to get a loan at the banks weren't lending. It was, the world had changed. So I started looking at that, and I said, we're at this moment, it's like a pivotal moment, I think, in history where companies and investors have an opportunity to meet, and investors have an opportunity to finance this great innovation that's emerging, and game changing, like just like in the 90s, in the internet and all these other, previous iterations, except the fact that when all of those other television, radio, internet, when all those came to be, they had the opportunity to obtain the capital that they needed to grow from banks, or or from the stock markets, the equity markets, and that was no longer the case. So I started just writing about this, talking about this, hosting events talking about this, and that sort of led into, this was now it's probably about 2011. So I was kind of writing about that for a couple of years. Then 2011 came around, and the House Financial Services Committee had just passed a bundle of bills that we now know as the Jobs Act. So I was doing these events, writing about this, and I wrote an article called "Bipartisanship Prevails for Job Creation," and then I talk about this concept of crowdfunding and how this could be, incredibly game changing. And I sent the article to Congressman McHenry, who had introduced that bill. And the crowd, he's behind this one sponsor of the crowdfunding bill. And he graciously agreed to headline an event that I was putting together in New York on January 23rd, 2012. And that became the very first crowdfunding conference. And it was, just starting from there. And that's really where the whole thing started. And then we started just sort of taking that message on the road. During that year was when the Jobs Act actually ended up passing. It was just, an incredible experience. And then from there, it was really just kind of staying with this whole, to me, it's like a whole story. It's like the evolution of finance, and just watching the story unfold, even from back from the 20s, and seeing how finance had changed, over the last 100 years. And now, now we're at this incredible, moment in time where, to see the impact of blockchain on finance and where that goes. So it's kind of just been following the story. It's fascinating, really.
So, Dara, I got to tell you that this is one of the most detailed backgrounds we've received. I really feel like I was there with you, going from Wall Street, trying to understand from there where markets scale after your time with Underberg Tovin, really making those connections. I actually hadn't painted that picture before of mass communications fueling the stock market and looking at each new medium as a whole new period of economic growth. As a marketer, I want to do a lot of Googling to follow
Right.
this, just to really get a better sense of the story as well too, because it makes a perfect connection that I hadn't seen there before. And then
Oh,
how you
I'll
talk
send you.
about,
Yeah,
yeah,
sorry.
I'd love to look
Go
at
ahead.
it.
No, I'll
Would love
send you
to look
some
at
really
it.
cool articles and charts that even just show you. Just you could even look at, charts of the Dow and Nasdaq even over the years, and you could
Mhm.
pinpoint exactly where new iterations of mass media was actually introduced.
I've heard Dow used so many times in the past week in different contexts. I would definitely like to see that correlation for the Dow. And like you said, embracing this pivotal moment. And as you were talking about everything that you championed for in 2011 for the bipartisanship of pushing crowdfunding forward, I was first introduced to the Jobs Act in 2014.
Yeah, we early on, definitely early on, and it's been, like I said, I mean, it's been pretty incredible just watching it all evolve. It took so long for it to actually be implemented,
Yep.
and I think even probably 2020 was probably even really a turning point or an
Yep.
inflection point even for crowdfunding alone. I mean, 2020 was a really interesting year that people really started looking at it and saying, this is interesting. I want to get involved in some of these deals.
Absolutely, absolutely. We had Reg CF campaigns going at the beginning of May, like I mentioned, 2016. But for the next 2 years, felt like I was explaining to people what equity crowdfunding was every day. The
Right.
awareness was not there yet. It was interesting to see the blockchain discussions enter the space. For us, late 2017, and the bull market that was occurring there. Then, as the bear market entered that space, there was less enthusiasm, but I saw a lot of the professionals move to equity crowdfunding at that point around 2018. And that's when we saw greater and greater success rates of the campaigns that we were associated with. Had some strong Reg A Plus campaigns in 2017, but Reg CF results really stabilized for us around 2018, 2019. As you mentioned, there was positive growth that occurred from the pandemic for this space as the retail investor emergence occurred. And we, of course, read about that for users of Robinhood and everything,
Right.
even with Wall Street Bets and all of these different groups that have built pools of retail investors online, and how we saw it and really month over month growth since an equity crowdfunding outside of March and April this year, where of course the expansion occurred. So it's no longer 1.07 million for Reg CF. The $5 million cap was put in. It keeps rolling out further and further with number of issuers that are raising capital, number of investors, and on each portal, the effectiveness that provides for all sides of the table, from issuer to portal to investor.
Yeah, so great question. But first, I just want to say one thing. The Intel, by the way, the valuation, their market cap was 58 million. They actually
Oh,
raised
the
8
offering.
million on their IPO. Could you imagine? So it was not too much more than a Reg CF today,
Sure.
which is pretty incredible. But now I think where, technology just keeps advancing and snowballing. And so that's changing finance in, incredible, unprecedented ways, and an unprecedented speed, because everything is happening so much faster right now. Um, and regulations, trying to keep pace, but there's so much happening, I think, with respect to innovation and technology and technological advancements, that I think where we're headed now is it's an exciting time. I think it's an exciting time for really everyone, whether you're an issuer or whether you're an investor, because I think that we're headed toward a time where it's almost like crowdfunding 2.0. If crowdfunding was the opportunity um, to really help democratize access to capital for issuers and give investors more opportunities, then where blockchain comes in and what's happening with decentralized finance, that just takes it to an unprecedented new level. So I think where we're going to see this going is so much more of an opportunity. It's going to be like crowdfunding on steroids, because you're going to have an opportunity to reach so many more people across the planet. I think you'd mentioned Robinhood before, and we talked a little
Yep.
about 2020. If you look at, Robinhood, I think they did a really great job in 2020 of, it was a very, unique year, to say the least. And it was a year when everyone was kind of, staying home. No one could go to work, no one could go to school. People were staying home. You couldn't go spend your money on vacations. They couldn't spend their money on, tickets to the movies or tickets to concerts or, whatever. Their entertainment was the stock market. That's what became their entertainment. Entertainment became trading. So one thing you could say about 2020 was that I think it inspired a whole new generation of investors. And I think that impacted crowdfunding. It impacted, trading traditional equity markets, crypto markets. And I think if that was the year that sort of really brought, a lot of the younger generations into this, I think where we go is we're going to even see so much more democratization on both the investor as well as the issuer side. I mean, my kids now, my son is coming to me at, he's a sophomore in high school, coming to me asking me questions about, where do he wants to invest in what cryptocurrencies they're looking at. They're looking at, equity. It's amazing. It's
Yeah.
amazing. And, I can't even imagine, like, if I, when I was 16 years old and someone came to me and said, oh, what do you think about the market? I mean, I would have said, what, the place where you buy fruits and vegetables? Like, I would have no idea what they were even talking about.
Sure, sure. Likewise for me, I would have thought of line graphs where I did not have a relatedness to any side of what was going on. Where it's a great thing to point out the youth, the different market, the different demographics that are entering the market, and the resources that they have at their disposal.
It's
From
amazing.
yeah, yeah.
And if
Can
you
you
think
imagine
about
listening to
it,
some of those podcasts or articles on a daily basis?
right.
What to be able to buy, trade yourself, given age restrictions. But let's say we're talking about a young adult, or under the supervision with an adult. I really try to take note of that. I've met some market makers in the blockchain space that were the head of their investment club in college.
you know One of the things that I think is scary, and it's kind of what I'm also working on now, and it's kind of a passion of mine too, is to do something to really fix the retirement system in the US, because it's scary now. I mean, there are people are just woefully unprepared for retirement, especially those baby boomers and generations that are closest to retiring. And it's because they never really had that, I think, financial literacy or knowledge as a youth, and they didn't start early or early enough. And it'll be interesting to see the impact of, like, the Robin Hoods of the world, the crowdfunding, like all of the the financial literacy platforms, and all these new peer to peer platforms, crowdfunding platforms. I did a podcast recently with a gaming company that just raised, they raised over $1 million on their Reg CF. They're a very successful crowdfunding campaign, and it's a gaming company in the virtual VR world. And he was telling me that don't underestimate the youth, because he said, I would get calls. He was saying that of kids that wanted to invest. They were the gamers, and they would ask very sophisticated questions. What's your burn rate? What they would actually read financial statements, and they would invest. They would get their parents on the line to approve it and all that. So, but it was just very interesting how those kids had such a knowledge. And it'll be interesting to see where we might be facing a retirement crisis for those now nearing retirement that are woefully unprepared. Maybe this actually ends up fixing itself because of fintech and technology and crowdfunding and blockchain and so many of the other innovations that we're seeing.
I love what you said about the questions that earlier stage investors, and I think we're using the example of youth, were using. I was recently at a conference in Miami. We spoke, I was exhibiting. DAOs that they were involved with, and how
Amazing.
fast they're increasing, and everything happening with NFTs and
Right.
overall yields. It was really impressive. And to your point, and again, I can't get over the resources that are at the disposal to audiences now. And like you said, the impact that can have, whether it's towards retirement or towards multiple sources of income. But it really makes so much more available today.
Oh, amazing. And you bring up NFTs. I mean, that is such an exciting area. I mean, the opportunity to even be able to monetize assets, your own assets that you haven't even thought of before. It's almost like everyone is going to become an issuer in some sort of capacity.
Yep.
You could create an NFT. We talk about artwork and contracts and music, but I mean, think about the app for even just assets that you own. Think about the ability to monetize your house, or through an NFT, or your car. It's just the opportunities are boundless. Like
Oh
it's
yeah.
such an incredible time in history.
Oh yeah. Anything that you can show proof of ownership and being able to have that defined as an NFT and be able to show an appreciation and
Right.
therefore a marketplace that would be interested in those type of purchases. It's really exciting to see where it's all going. We of course get to be at the forefront. I know you're advising companies directly as well too. Wanted to ask you some questions that could be applicable to founders listening in.
Okay.
You've
Sure.
been in fintech, in finance, a pioneer of these stages of growth at that. So, for any founders that are listening in, if they're structuring their product, putting together the model for their business, or even actively fundraising, whether it's an equity crowd fund, direct to investors, maybe entering a marketplace for an NFT, what recommendations do you have for them? What could they test out for their own processes or their own rollout?
Yeah, no, great question. So I think, when for founders out there that are listening and they're looking twofold. There's the marketing of your product, and then there's the marketing of your business. And I'll talk a little bit about the marketing of your business, because that's sort of, marketing your financing, marketing your equity. And that's sort of been the business that I've been in for a very long time. So I think I could add a lot to that. So I would say to those out there that are especially looking to raise capital, I would say, first of all, you have an incredible opportunity now to leverage crowdfunding, where you could actually be doing both at the same time, where you could actually be marketing your product and your company, your business at the same time through crowdfunding. So I would encourage, first of all, for companies out there that are developing any kind of direct to consumer type of products, it is a no brainer to go out and use crowdfunding to raise capital. No brainer at all. I mean, even for companies out there, someone just has an idea on a napkin, go out to start on a Kickstarter campaign and see if there's even a market for it. Test it out, see if you could do something, from a rewards based perspective, and see if there's even an interest in the market, in the product. But there's really no downside to to using crowdfunding for businesses in that stage. And then I would also say, it's such a great way to, once, even for companies, you don't even have to be in that early stage. I mean, even for companies in later stage, you could be Apple. If you're Apple and launching a new product, you should go out there and do a crowdfunding campaign, because you could test the market on that new product and see if there's, test it. It's a free way to test out your new market and generate sales, right? And it's a
Absolutely.
great way. And and look at the benefit. I mean, look, if the product doesn't work, no one wants it, well, then you know what, you just saved your shareholders a lot of grief. And if there's
Test it
if there
out,
is a
see how
genuine
audiences
market
are
for it, well, then
responding,
that
look at the
kind of helps you
messaging,
format your game
and
plan
build a
going
whole
forward. So I
following.
would say,
Whether you're Apple,
without a doubt, use
whether you're
crowdfunding there's so many ways you could use it to your advantage.
test it out, see how audiences are responding, look at the messaging, and build a whole following.
Yeah.
Whether you're Apple,
Exactly. And I would also say to people that are out there that are looking to do crowdfunding or get into space, what I would actually say too, in terms of another really great recommendation, because you can't just launch a crowdfunding campaign, right? As you know, and then it's like, well, we'll post it and they will come, because that's just not a realistic, way of looking at it. I mean, there is work involved in marketing work. There's a lot of marketing work. You do want to build, you have to build your market. You have to develop it. And the best way to do that, I think, for someone, let's say, starting from scratch, we have this little thing at our fingertips. It's, called the internet. We could go do a Google search, and search for almost pretty much anything right now. But I would go and I would search and look at, do articles. So you're launching a, whatever widget, whatever industry it's in. You start doing Google searches on it to see what bloggers are out there that are, writing about that particular area. And then I would go read those articles. And then you also have an opportunity, now the world is so small, to connect with those bloggers. LinkedIn, Twitter, whatever, all of these different platforms. And so you really have an opportunity now to really get to know not only who, your customers are, but who your customers will ultimately become your investors too through
Mhm.
this. Your customers, your investors, and the media becomes, these are, which is also part of the media, is now not the traditional media that we know, but it's also your customers and your investors.
Oh yeah.
Everything is becoming one. We're all sort of, we're all converging into having the opportunity to play every single role. So that's what technology is doing, where it's creating the opportunity for us to be, we're all issuers, we're all investors, we're all consumers, we're all writers, we're all bloggers, we're all advertisers, marketers. We all fit that role. So it's, you go out there and connect with everybody, because you do have the whole world at your hands, really.
Yeah, and I love how you painted that contrast of user owners or customer owner media. I don't normally tie that in, and you're absolutely right. The lines are blurred and in a good way. And
Right.
we paint so many positive pictures of equity crowdfunding, of entrepreneurship as a whole. Not all rollouts are successful, whether you're
No,
talking
no.
marketing or overall growth. And I like to paint some different options for founders of what to do if they're not hitting their projections, if they're not hitting their goals, their numbers.
Yeah.
We like to talk about how to optimize. What could founders do? What is the right approach if they're not seeing what they're playing for right out of the gate? How can they optimize, again, whether it's their marketing, their equity crowdfunding, their overall growth? How can they pivot?
Right. Yeah, no, that's a great. Well, first of all, and I'll put a little bit of a positive spin on that. I will say that, sometimes failing is good too, because failing really gives you an opportunity to also more chances to succeed, because you learn way more from those failures than you ever will in any other. You know, you learn way more from your own failures, especially.
Agreed.
So I don't think that that's necessarily a bad thing. But, like, if, let's say, a company is going out there and they're not hitting their numbers in a crowdfunding campaign, well, the first thing I think you need to look at is, am I am I hitting the right market? Am I going to the right people? Um, and I think that they need to really take a look at, who they're reaching, and are they reaching the right people, and are they doing that in the right way? So that would be the first thing I would look at. A lot of people, I think, fail in crowdfunding campaigns because they expect that they don't really have to do the work of bringing in the crowd of, they think that that's going to be done for them.
Right.
And I don't think that that's really reality. I think that they need to go out there and they have to build their own crowd. And whether that, look, it could be sitting there, every waking hour that you're not doing something else, is going out there and looking for that market. Who could I connect with? You just have to go out there and read who's writing articles. I mean, this is when I first started doing these crowdfunding events in the early days. I would have, and this was before, Reg CF, and this was before equities crowdfunding was legal. So it was only the Kickstarters and the Indiegogos. And I would, when we were going city by city, we would have a CEO come in that was doing that had done a successful crowdfunding campaign that was based in that city to tell their story. So what made this successful? Like, how, what would you recommend? And the interesting thing was, and we've had everyone from like Pebble Watch, we had, the day they crossed 10 million in funding, to little companies that were out there just raising $30,000 on a little widget. And I remember we had this one company, they had this really cool little widget that it was like a stand that you put your cell phone on, so you could take a selfie, and you could get always the perfect angle of the picture, a perfect selfie angle. And it was like just a little widget that you were able to put attached to your phone. And they did a Kickstarter campaign, put their campaign up. No one was coming to the campaign. And, a week goes by, like zero funding. They were not doing well at all. And then all of a sudden, one morning, they woke up and they were like oversubscribed. Like they had like almost their whole crowdfunding campaign, everything that they needed was done. And they're like, how did that happen? And what had happened was that they had gone out and they literally reached out. They did the research to find, who writes about widgets, widgets in this space. And they found a blogger from the other side of the world that saw these, that they contacted, they sent, whatever the video or the link to. And the blogger thought it was cool, wrote an article about it, and the next day their crowdfunding campaign was oversubscribed. So I would say, the answer to that is, you really have to go out and reach everyone and research. I mean, the answer usually is right in front of you, right on your, it's right at your keyboard, right at your computer, but you just have to do the work to get there.
Mm-hmm. It was very proactive recommendation there, and I'm glad you're able to share that specific example too. Sometimes doing these thought leadership pieces, it's easy to speak in generalities, and I know the audience always includes different examples of things that stood out to them most. So I appreciate you going into that level of detail, and it shows as well too. And you mentioned earlier, just by building it doesn't mean they'll come. If you're not seeing the results right away, don't get discouraged. Keep brainstorming. Where's my target audience? How can I engage them over there? Is there an organizer I could speak to? Is there something else that we can do? How we could provide value across the board and really speak to whoever it is, whether it's an influencer or the audience themselves, and add to what they're doing. Right. So I think that's very constructive. And, I don't want to be too negative talking about how to optimize, just want to see a higher success rate industry wide. So always like starting there. What about success? What about scale? How can a brand scale? What are some of the examples that you've seen, different success stories of scale?
So, I think, and that scaling is probably one of the hardest things, I think, that,
Right.
it really is, because scaling, it's not only about having the right product. I think it's having the right product at the right time with the right team. So you kind of need, it's almost like all the stars need to align for that to happen. So, it's not like, it's like not everybody is going to scale. I mean, it's not, so I think, you need to have those pieces together. So I would say for, the companies that scale, they had those, the companies that have scaled have had those ingredients. But you had mentioned something before, just how do they pivot? And I would say companies that maybe are struggling to scale, and maybe they reach a point where they're like, I don't, there's something that's not letting us get to that next level. There's something that's not letting us get there. I think at that point, companies that survive are the ones that do pivot. So they find something, and it could be anything. It could be, you have to kind of you have to look at the market. You have to look at the product. Did another product come out, and, maybe it's a lot better than yours, and this is even with major companies. I remember, this is always one of my favorites when Apple came out, I think with the iPhone originally in like 2007, and then the president of Microsoft at the time said, it's nothing, it's never going to go anywhere. It's going to be like, it's going to be nothing. And look what happened.
Sure.
So I think, I think it's not so much even having, I just think the vision, but I think it's really going out there, and I think, it's realizing that, okay, I really think this could work and I can make it work, but if it's not there, and it may not happen, and if it doesn't happen, then I think it's time to just stop, take a deep breath, and then move on to another product. Just step away and then move on. And I think, some great companies became great companies because of pivots. I don't think pivots are a bad thing.
Hmm.
Pivots could be great. I mean, but it just, I think it's just wise to know, if when you get to that point, and if you're not scaling, sometimes it's better to just do the pivot and move on to something else, and try to fit something, or fit something in, what was it, the square peg into the round hole, or make something
Right.
work that maybe's not meant to work.
And like you said, having those learnings in general, there was a saying of, to be an expert at something, you have to have failed at it every way you can. I
Right.
don't think we're exactly in that category here at the agency, but we've certainly see a high volume of things not work, and be able to pivot to more effective, more efficient solutions for those campaigns, and then roll them out to the next campaigns. So that's what I hear in your answer there for founders is take the learnings. The pivot will be even that much stronger, and you've seen some
Exactly.
campaigns scale to those great levels as a result. And don't be discouraged by any type of negative press, negative responses. The iPhone didn't get the best reception on the rollout. So
Right.
all valuable thoughts there.
And you're right. And I think you do have to be flexible. It's all about flexibility, because if you're going to be rigid and say, no, I need to do this, it's going to work. I'm going to do this. It's going to do it my way and this way. And
Yeah.
if you think like that, it's probably not going to happen. If you're, you have to step back and look around, take advice. Some people don't like to do that, but I mean, advice really does help. I mean, sometimes
Yeah.
you kind of, especially, you're so in the weeds, and you're so focused on what you're doing. It's hard to sort of step out of it for a second and say, all right, let me look around. Let me get some feelers, see what's out of there. You sort of have to step outside of it for a little bit, and look at other deals, talk to, other ideas, talk to other people.
Yep.
Yeah, that's, be flexible. I think, yeah, that's the one thing you just have to, what the best word, you have to be adaptable. You just have to adapt, because that's what it's all about in business. The ones that adapt are the
Love
ones
the
that
idea of
make it.
get advice, speak to founders, speak to professionals, speak to experts like yourself at that, people who've been down this road and would even be in your corner. But whether it's a marketing, whether it's an overall, love the idea of get advice, speak to founders, speak to professionals, speak to experts like yourself at that, people who've been down this road and would even be in your corner. But whether it's a marketing, whether it's an overall chat or a full engagement, there's a lot of, again, resources available. People have been down the road, get that outside perspective and from experts.
Yeah, and experts that have failed, like a Steve Jobs, right?
Yep.
Definitely a Steve Jobs. I mean, that, he has an incredible story, and I mean, look, he was fired.
Sure.
I mean, he was fired. He was deemed a failure, and look how he came back. So, and I would even say that too, if for entrepreneurs that are listening and maybe are struggling right now, go and look at some of the quotes from like a Steve Jobs, or some of those really successful entrepreneurs that have failed and then came back, because it's so inspiring.
Hmm. Success leaves clues, failures even more so. So,
Yep.
yeah, definitely stand on others' shoulders, be able to take those findings and adapt them to your model.
Yeah, and
And
then the
there,
last one I would say, one other, is keep going.
please.
That's the other thing. People will just say, you know what, maybe I should just stop and that's it, and let me give up. You can't give up. If you give up, you lose. But if you keep
Mhm.
going, sometimes it may not go to the place that you're expecting, but it might go somewhere better.
Mhm. Absolutely. And that is a commonality that I've seen from the top founders on the most successful campaigns that we've been a part of. As I worded it, the grit towards success, but that keep going. Hey, let's assess it. What can we test out next? For marketing, we try to look at audiences, creative, funnels, but that, for different disciplines, there's other ways to analyze it. But definitely keep going. Whether you choose to go down that route or not, there's a stopping point in many scenarios, but I don't see it. My recommendations are always on how to get it to work and the problem solving around it.
Yeah. There's another great story about a famous entrepreneur, Thomas Edison. And
Heard
I
of
don't
him?
know. Yeah. So I don't know. Most people know this story, but Thomas Edison had, at like 60 something years old, his entire factory burnt to the ground, and all his life's work was in there. And this was, he was not a youngster. He was in his 60s now, and all of his plans, inventions, everything completely burnt to the ground. And he was standing there, I think, with one of his child and his wife or something, and they were watching this fire and watching his whole life's work burn to the ground. And he looked at his family and said, um, take a look at that, because you'll never see another fire quite like it. And then the next day got up and started over again. And just an amazing story. And I read about that story. It's actually in 2014, and I was going through like a whole issue at work, and something that I was going through, and it was so inspiring. And the story was about, that was the perfect example of stoicism, and he was the ultimate stoic. So the next day, I actually got the Twitter handle to the Stoics, and I just started. It was, to me, it was an inspiration, and I just started. Everything was about, was about overcoming adversity and
Hmm.
practicing stoicism, and that was another great inspiring thing for me personally. Other people may want to read about that too, because it is inspiring, and I think it could be helpful. Especially if you're at that point where you're like, I don't know if I'm going to make it. You will. May not be the way you think, but something else will happen.
Sure. Everything just burned down. What do I do from here? A lot of different places the mind could go from there, but being able to
Yep.
approach it like Edison, we need more Edisons in the entrepreneurial community here.
Right.
Definitely.
They can reach me LinkedIn. Feel free to connect. I'd love to connect with you, and we could correspond through there. You want to reach me by email, you could feel free to do that too, at dsa@daraalbrightmedia.com. Twitter, you could find me at To The Stoics on Twitter, and also D Wealth Muse, MUSE. And yeah, so I mean, feel free to connect that way. I always love, like, talking to entrepreneurs and people in the space. So I mean, feel free to reach out. I mean, I'll definitely respond because I just always love chatting with people, and to me it's all like I love learning about other people's stories and hearing, and I'm always happy to I feel like sometimes I feel like I'm a matchmaker. So I love to, whether it's like introduce an investor with a project or a project with an investor or something, a company with a new client, whatever it is, I love being a matchmaker. So if I could help out in any way, I'm always happy to do it.
Very nice. Very nice. And definitely encourage listeners to get in touch with Dara. Do not take that offering lightly. Matchmaking, I mean, that's what it's all about. And Dara, thanks so much for joining. This has been so educational. I have notes that I'm going to be sharing with my team and different recommendations here. You're a wealth of knowledge.
I love it. Thank you. Thank you. I really appreciate it. Well, thank you so much for having me. This was a lot of fun.
Absolutely.